Hey guys, Stock Saturday and a very slight red week this week. 1,000 down. S&P is up and the Nasdaq's down, so it's sort of a bit of a mixed bag really. Not too much in the way of moves this week, but we are starting to get earnings come out. So let's take a look at a few bits and pieces. So as you know, I'm not in the banks or sort of Tesla and that sort of thing. So my first generally is TSMC, only available in the invest account, not in the ISA, unfortunately. But they're doing sort of reasonably well. Sort of expected a bit of a poor quarter this quarter, certainly sort of a bit of a rough year to be honest. Not a huge amount of growth, but they're not looking too bad. Sort of in the middle of their guidance on revenue, which was down from sort of same quarter last year, but not too bad. 54% gross margin, 42% operating margin, so still very much profitable. 37.8% net margin, so yeah, incredibly profitable, but just not the sort of growth that they had been getting year on year for the last few years. But it's, all expecting this to do well over sort of the rest of the decade, really, with growth in sort of AI and various sort of technologies. Electric vehicles obviously have an awful lot of advanced semiconductors in, even if they're not sort of the most expensive chips. And just looking at the balance sheet, so cash slightly down from last quarter, but up on last year. And property, plant and equipment always rocketing up from last quarter. And what is that, 25%, 30% up from last year. So still heavily building. And debt, current liabilities down slightly, long-term liabilities up slightly. So that's all obviously well covered by the cash. So yeah, all looking good. Shareholder equity up because of that, basically, because of the above. So all pretty happy with that. And the guidance for the third quarter, revenue between 16.7 and 17.5 billion. So quite a bit up from the 15.7 billion. So expecting a sort of reasonable recovery sort of towards the end of the year, it seems. Gross profit margin 51.5 to 53.5, and operating profit between 38 and 40%. So revenue up, but profit margin slightly down. And they are ramping up the 3nm rollout. So this is good. Updates on the 2nm as well for the future. That's sort of expected in the next couple of years. They do have this sort of ongoing battle with Intel. Intel sort of claiming that they're going to overtake TSMC in 2025 with sort of the 1.8 nanometer basically, or 18 angstrom, I think they're calling it now. We're not sort of going by nanometers after 2nm, it seems. But yeah, they're still looking good. It's still basically an oligopoly, as you call it, between them, Intel and Samsung, with sort of global foundries on the fringes and the Chinese sort of doing their own thing, basically. I do think people sort of seem to forget the overall industry. They'll focus on Nvidia and AMD and people like that, and sort of forget that none of them actually make their own chips, pretty much, other than Intel, of course. AMD use TSMC, Nvidia use TSMC, Apple use TSMC, and some of the other sort of newer people are getting in, Microsoft and Google and people like that. So yeah, I kind of like this play. So assuming we don't get a sort of invasion of Taiwan, I like this as a sort of picks and shovels almost, and a sort of basically whoever wins out of the AI run, it seems TSMC will be doing it unless they move to Intel. but I would imagine there's room for both. So Fortuna, not an earnings yet, but they have announced production results, and they've done 93,000 gold equivalent ounces. Noticeable that they're starting to call it gold equivalent ounces rather than sort of announcing the separation of gold and silver. It just shows they are moving sort of more towards a gold miner, despite being Fortuna silver mines. Their sort of biggest project now is going to be the Segala mine, and that has just started ramping up. First sales planned for July. So this is the sort of $1,000 per ounce cost mine. So that is sort of the big money maker for the next few years. Sort of obviously being around about $1,000 at the moment profit per ounce on that mine. And their sort of silver ounces and other gold ounces adding, a decent amount of profit, but sort of way behind that sort of run per ounce. But yeah, 64,000 ounces of gold overall, 4% increase over Q2 last year. Silver production is quite a bit down, 24% down over Q2, and their sort of life of those mines is not the best. So as I say, they are going to be largely a gold miner sort of in a few years, unless they can put some decent money into either exploration or buying something else. And zinc and lead up quite a bit over last year, but this doesn't sort of contribute a huge amount of the total revenue. But yeah, there you go. And while we're on the miners, we'll have a look at Rio Tinto. They've announced their second quarter production results. Again, not earnings yet, that'll be later on, but this sort of gives you a good idea. You know the metals prices and you know what they've produced. So yeah, pretty much everything quite a bit up. If you look at the half, quarterly sort of production can be a little misleading. Obviously, you can have issues in mining and weather conditions and that sort of thing. So it's better, I think, to look at the half, and half compared to last year is sort of pretty much up across the board. Iron ore is obviously the vast majority of their revenue, and that's up 7%. Bauxite down 8%, but aluminium up 9%. And copper, they've had a few issues, it seems, on copper in the last sort of 6 months, and that's down 1%, but they're still sort of ramping up, and they think they're going to be double what they are now in the next 5 years. So that's interesting. They're moving sort of slightly more diversified from sort of being basically just iron ore and sort of some other bits and pieces in terms of sort of revenue and profit. If you come to their guidance, there's sort of not a huge amount sort of changed. Still iron ore pretty much unchanged. Aluminium has come down slightly. Copper has come down, or refined copper has come down slightly. The actual production is unchanged. So yeah, with metals prices sort of potentially already bottomed out late last year, sort of early this year, unless we get a very severe recession, then yeah, could be looking quite good. It's still a long-term hold for me. I'm sort of eagerly awaiting their copper ramp up. It'd be nice to sort of have a more diversified iron ore and copper miner alongside my sort of other more focused copper miners. So yeah, pretty good. Some bullish news for Broadcom. Their almost $70 billion VMware purchase or acquisition has received approval from the UK competition watchdog. So obviously neither of these companies are headquartered in the UK, but they have a lot of customers in the UK, so the Competitions and Markets Authority gets a say, basically, and they have approved it. A lot of the other sort of regulators seem to be approving it as well. The EU sort of seem fairly happy with it, and yeah, it's deal's not over the line yet, but they're sort of looking pretty good. VMware, remember, has close relationships with Amazon, Google, Microsoft, and sort of pretty much every cloud provider. So this sort of gets Broadcom away from solely focusing on, or not solely focusing on, but largely focusing on sort of companies like Apple for the semiconductor side. Sort of gets them more into software and sort of can grow other areas of the business, sort of expecting their large sort of revenue to come down from people like Apple as they start sort of developing their own chips. So this is good. If this didn't go through, it would sort of be a bit of a sort of an issue going forward from sort of 2025 onwards. But yeah, if this can get over the line, they're getting other revenue streams for when their current sort of semiconductor stream reduces. So just looking at some of the news for the week, it was a sort of quiet start to the week, but then Wednesday we had UK car registrations up 25.8% for the year on year, 22% up on last month, so that was fairly bullish. Obviously UK isn't a huge market, but interesting to focus on us. And then the big CPI data. So this was sort of quite a surprise. Core CPI monthly was 0.2% up, which was expected to be 0.4% and was 0.8% in the May number. So that's come down quite a bit. The year-on-year sort of slowly coming down. It was expected to stay level, and that's now 6.9%. Obviously, a bit slower than people would like it to come down, but unless we got negative on the core, then the annual was hardly going to be rocketing down. That could, if we keep getting these sort of numbers, then this annual number will sort of trail off quite quickly, because the sort of comparisons for July, August, September will start to have a lot more of an effect. Obviously, June, May and April last year was quite bad with the start of the war. And then normal CPI, 0.1% for the monthly, was expected to be 0.4%. So yeah, that's pretty good. And the annual 8.2% expectation was 7.9%. So that's 0.8% down from last month. That sort of made the headlines, and people saw it as super bullish, even though food inflation, I think, is still sort of 17%. So it's not as if we're out of the woods, and I think there's still probably rate rises to come, even if it's probably not the best idea. But yeah, we'll see. Whereas the EU inflation was higher than expected, 0.3% core monthly expectation, and that was 0.4%, up from last month, and the annual is even up, so that's not good at all. I think we saw provisional figures for these before, and it's sort of slightly changed since those, but yeah, that is pretty poor. US sort of housing news was all sort of worse than expected, so yeah, be interesting to see sort of how that goes going forward. Housing sort of stocks in America seem to be at sort of relatively long-term highs, which is quite surprising. I suppose I would say the US don't get hit as much as us because of the long-term sort of 30-year mortgages, where the UK will have big issues this year and next year, with everyone sort of coming off their fixed rates at 1% and going on to sort of more like 6%. But yeah, and then the jobs data, people just saw this as bad. Labour market still fairly hot. Initial jobless claims down from last month and lower than expected, and the sort of average down as well. So people expecting more rate rises. I think next week is FOMC meeting, so we'll have to see what happens. So as I say, not a huge amount of change in the portfolio, almost nothing in the invest account. I just got a small dividend from TSMC, and yeah, that was about it. Not a huge amount of movers either, really. In the ISA, I have taken the hit, bit the bullet, and sold my 3x Nasdaq short. May have sold the bottom on that if we get a bit of a downturn on the Nasdaq, but I just think I've learnt my lesson with shorts, and I thought I would just get out of that. I haven't sold the Nvidia one because it was only sort of 35 quid, and I just didn't see the point in that. Nvidia still could have a reasonable crash, and that might go up, but yeah, the other one was the Nasdaq one was sort of 1,300 quid, I think. So yeah, it seemed worth taking the loss on that and at least taking the money out. And so I just put that into the smart overnight, essentially sort of a money market fund, but not really, because it sort of mainly does commercial bonds rather than government bonds. CleanSpark sort of took a bit of a drop, but nothing too much, still sort of 50% up, and very much more in the other ISA. Gold miners sort of had a bit of an up move and then a down move. I'm sort of keeping my eye out, to be honest, for if these do sort of come down a little bit further, maybe then taking some of this money market sort of money out. This is sort of not intended to be here all that long. It was just parking it here to earn some interest, really, and it seemed better than the 1 to 3 year treasuries that I had. But so it just earns about 4% a year, it seems, maybe 5%, and it's just sort of a cash position, basically. So I am very bullish on the gold and silver miners, obviously, and CleanSpark as well, but I'm not sure I want to buy that at sort of $6.40, even if I do think it's going a lot higher. And yeah, I didn't really sort of fancy buying any of the REITs at the moment. So yeah, it's ploughing more into gold and silver, and well, maybe CleanSpark if it does come down, or maybe something else crypto related. Pretty much same deal in the IG ISA. Pan American sort of having a reasonable couple of weeks now, and Atalaya not doing too bad. Interactive brokers side, the Chinese tech is sort of a little bit up and down. Alibaba sort of doing reasonably well. And I bought a few more options. Sort of obviously CleanSpark has come down a bit with the drop in price. But I bought a couple of core mining options, and 3 more Fortuna silver mines, sort of expecting that profit to start coming in from the new gold mine, and people sort of taking notice. But I might get a little bit more Equinox gold, depending on sort of where they move. Still got about 500 pounds or so in there, sort of ready to buy more, and I might put some more money in, to be honest. Kind of thinking, as we get closer to sort of crypto bull market and potentially gold and silver bull markets, I've still got my eye on potentially selling Porsche, and if need be, maybe some of the Vanguard emerging markets, and sort of putting that into potentially crypto options, all sorts, really. Sort of thinking that would be a better return. So yeah, potential risk. But let me know your thoughts and what you guys are buying, and like and subscribe. See you soon.